Bitcoin has a death cross that's quickly approaching, and everybody is already saying that we're in a bear market. But in today's video, this is a realistic prediction just based on the facts and the charts. Welcome back if you are returning. If you're new, you want to have less stress and more success? Yes, you do. Hit that subscribe button, turn on the bell, and hit that thumbs up button. Less stress, more success, hit that subscribe button. Did you hit it? Hit that button right now. Now we're going to get into the death cross. We're going to get into this bear market concept, and we're going to keep you level-headed with just the facts. Before we get into this chart, you need to, if you haven't already, go get your free course. If you don't have our free course, you're completely left behind. If you're looking for financial freedom, you want more education about this space, get your free course. CryptoCrewUniversity.com, it's linked down below. You're gonna click right here to get your free course. You'll have it in 3 seconds. It'll be the best decision you've ever made. Go get your free course, don't be left behind. CryptoCrewUniversity.com, click right here, get your free course. Now, we have our green line, we have our red line. The green line is the 50 moving average and the red line is the 200. We're on the daily, making it the 50 daily and the 200 moving average on the daily. Once you see this green line cross down through, that is a death cross. It's not a good thing. You never want to see a death cross in a bull market. In fact, it never happens. It means that the bull market is over. So there's 2 things that need to happen in order to be in a bear market. There's a lot of talk out there that we're in a bear market already because we've had a 55% correction and the world is ending and the fear and greed chart is reading extreme fear and there's blood in the streets and everyone's panicking. But the facts are the facts. We have 2 rules. And we've used this for years that help everybody stay level-headed. Here's our 2 rules to see if we're in a bear market. Rule number one, and by the way, we've got to have a check mark next to each of the 2 rules for us to be truly in a bear market. Rule number 1, price action must be below the 200 daily moving average. And if we look, unfortunately, we have a check mark. Now, rule number 2, we must have a death cross. Have we had it yet? No. The death cross is this green line must cross down through here. And if we have 2 check marks, one as a death cross and one price action below the 200, then at that point we are officially in a bear market. But we're not there yet, but this is quickly approaching. We need to see Bitcoin rebound. And here's a couple substantial points about price action below the 200 day. You may say, well, I bet in many of the bull markets we've had a bunch of days below the 200. In fact, no, that's not the case at all. And let's look left and let's try to get a bigger picture synopsis as what the hell is going on with Bitcoin. If we look at 2017, we've had exactly 0 candles below the 200 day during the entire bull run. In fact, we just barely had a wick here in August 2016. Nothing outside of that. There was no bodies of the candle. Like we've had multiple bodies of the candle present day. Let's look back at the 2013 cycle. 2013 cycle, we had basically no candles below except for this one, which is very similar to what we see happening. Remember that 77% correction? You can see we closed exactly 1 candle. This candle on July 6th, 2013 was the only day that we ever closed the body below the 200 day in Bitcoin's history of bull markets. So we're in very rare territory. One thing we can say with certainty is that also, like 2013, Bitcoin grew very rapidly and too rapidly. And in 2013, we had to have the market cool down. And we can also say the same for present day. From that coronavirus of that low about 3,100 to 65, it grew at a faster clip than the other cycles. That's not my opinion, those are facts. So if we grew at a faster clip, we grew faster than we should, we need a period to really cool down, to catch our breath, and to rejuvenate the market. These are all healthy things to build structure for the future. And again, we've gone into some charts like this one, and particularly these ones where we have our boxes. What we've done, similar to 2013, is we formed a critical support at our critical market structure, meaning inside of this box, when nobody thought we can go back to the bottom of this box, we did in cycle number 1. We did go all the way back to the bottom in cycle number 2, and we just did that in cycle number 3. So nothing out of the ordinary in the big picture, but in the short term, we have this 50-day moving average that is nosediving to come and have a death cross. And keep in mind, we did the same thing in 2013. Scrolling back in history, we can surely look and say, okay, the nosedive that took place is the one right here. It was nosediving down, and then the market rebounded, and we never had a death cross. You can see on the daily chart, we never had a death cross in that first cycle in 2013. We had a warning sign of a death cross, but we never actually had a death cross. So that's something to keep in mind. We will keep you up to date on this. That's why you're going to hit the subscribe button right now. You do not want to miss the newest news on this death cross and the bear market. But what are my thoughts? Well, the facts and the charts are we're not in a bear market right now. This death cross could very well happen, causing us to be technically in a bear market, but we need to remain level-headed and keep looking at the facts. We also know that we're in extreme fear. These are generally the best times to buy. This is not financial advice, but I just like to speak the truth. If you want to know when to sell cryptocurrency, which is the biggest question that I get asked, we made a video about it. This is many years ago we made it. Everyone loves this video. It's more than 3 years old. I'm going to link it right here. Click that click box. It'll take you right to the video. And if you haven't done so already, click that subscribe button, join the movement, hit the bell, hit the thumbs up. Less stress, more success. Hit that subscribe button. The last tidbit of information I will leave you with is just to remain level-headed through this roller coaster. And again, it's probably likely you shouldn't trade at all. If you get too emotional about trading, you should just buy and hold long term. If you're too emotional, it's going to destroy your money. You don't want to destroy your money. You want to grow your money. So it's likely you're not set out to be a trader, which is fine. Be a long-term investor, and you'll probably have substantially less stress and probably a lot more success by doing that, and remain level-headed through these emotional roller coasters that is crypto. Peace and love to the fellow underdogs.